The Goods and Services Tax Council will hold its 56th meeting on September 3rd to 4th in New Delhi. Now, during this meeting, the GST Council is expected to discuss the recommendations of various groups of ministers that it has constituted, including the issue of reforming the GST system into a two-rate structure in line with the central government's recommendations. The GST Council's 56th meeting will take place more than 8 months after the last one in December 2024. Now, according to the rules, the Council is to meet at least once a quarter. Let us now look at the expectations from these next-gen GST reforms that we're expecting, that the Prime Minister, of course, has announced to come during Diwali. So, we take a closer look at the next-gen GST reform. Some key highlights. The first one, of course, being the simplification of the tax structure, where one uniform indirect tax across goods and services will replace multiple cascading taxes. So, that, of course, is the biggest highlight that we're expecting from these reforms. Secondly, a reduced tax burden is what we can also see. Lower effective tax rates by eliminating double taxation and hidden levies. So, another very, very important highlight of this reform that is expected shortly. Thirdly, a boost to ease of doing business, streamlined compliance and uniformity across states to make business setup and operations smoother. So, not only is it expected to boost consumption, it is also expected to boost businesses. There will be a wider tax base, which is another highlight of this reform, by bringing more traders and service providers into the formal economy through digital compliance. So, digital compliance to help widen the tax base is another highlight. A digital first compliance, where a stronger integration of invoicing, return filing and tax payments with technology driven transparency. So, a use of technology and a digital economy to help boost the system. A curb on tax evasion is another highlight that we can expect, where through e-invoicing, invoice matching and input tax credit mechanisms, we can expect some curbs on tax evasions. Improved revenue collection is another key point, where higher compliance and reduced evasion to boost government revenues. So, again, a higher compliance and reduced evasion, as we saw previously. Now, another highlight is transparency for consumers, a very, very important point, where clearer breakup of taxes on invoices, ensuring people know what they are paying. So, again, another very big benefit for the consumers as well. Lower logistics supply chain costs, where clearer breakup of taxes on invoices ensure people know what they are paying for. So, this will simplify logistics. Of course, it is a simplified tax structure that we can expect. Then another key point is encouragement for startups and MSMEs, where simplified tax filing, exemptions and composition schemes to support small businesses. So, this will again boost business as well as medium to small enterprises is what we are seeing. So, we took a deep dive into what we can expect from these next generation GST reform that the Prime Minister announced. But I have with me Dr. Sharat Kohli, senior economist, also joining us on the broadcast. So, we took a very close look at what exactly what is being called as GST 2.0, what this will entail for the country. And what we're seeing over here is that not only is there going to be a big boost for consumers, it is going to boost consumption, but a big boost for businesses as well. So, how are you viewing this impact that this reform will have for businesses as well as consumers?
So good afternoon, Malgobaka. Good afternoon to the viewers of NewsX. Yes, this is going to have a twofold benefit at both ends. That is, on one side, it's going to benefit the consumers. They will get the goods at a cheaper price. I expect the prices to be coming down by 5 to 10%, subject to manufacturers and wholesalers and stockists not playing any mischief and trying to absorb, the benefit to their own profits. I hope that doesn't happen. Government will have to keep a check. The second fold of the benefit is going to be, as you rightly said, to the traders and the registered dealers, as they are called. There are 1.5 crore of them, whereas the consumers have 145 crores, but the registered dealers are 1.5 crore as of today. Yes, the compliance is going to become easy, as you said, e-invoicing, which is already there, but it's going to be further streamlined. The process of claiming ITC is going to be further streamlined. The two GST returns filed, the GSTR1 and GSTR3B, we are expecting some simplification in that also. Then simpler process of assessment, a simpler process in terms of e-way bill compliance when the goods move between the borders, when the goods are on the road. Yes, it's definitely going to benefit. But what is being more looked forward to, Malvika, is the reduction in rates. That is the number of rates coming down. Well, by the way, for the benefit of NewsX viewers, I would like to inform that the number of rates are far more. It starts with 0%, which is also a rate. Then there's another rate of 1.5%, which is on diamonds. There's a rate of 3%, which is on gold jewelry. And then there is a rate of 5, 12, 18, 28, and there's another rate which includes cess. So these rates are going to be aligned now. There's going to be only 5% and 18%. 90% of the goods, Malvika, for the benefit of viewers, are going to move to a lower slab. So obviously it's going to improve your home budget. It's going to make things within the reach of the neo middle class, which find some of the goods like air conditioners, refrigerators beyond their reach. They can go and buy them without any inhibitions. Obviously, government, as I said, government will have to keep a check that there is no profiteering on part of the dealers, manufacturers, and stockists, and try and take advantage, that not pass on and say, okay, no, if the overall benefit is 5,000, let's say on an air conditioner, and they pass on the benefit of only 2,000, and rest of the 3,000 they try and absorb within their profits. So I think a very strong check will have to be there. Then in the meeting also, Malvika, is going to be taken up the cess, because a lot of states which are not ruled especially by the government, they are trying to say that we are not going to allow this because our revenue is going to fall. So therefore they may try and resist this move, because there is no other source of revenue. 16, 17 taxes were combined into GST. So there are limited sources of revenue for the state exchequer. So there may be some resistance. The third agenda, which I feel is going to be about the insurance companies, because there is a catch there. If they make it zero, then they lose the ITC, or the customers benefit, but the company loses. So there are a lot of ifs and buts as of now. I hope this sails through. A very interesting thing, Malvika, which I would like to inform, which has happened, may sound interesting for someone, may not sound interesting, that the sales of these goods have fallen down. I was talking to a few market associations today, and I came to know that the sales have fallen down because people have gone into wait and watch mode. So my recommendation to the council, which is going to meet on 3rd and 4th of September, is to do this quickly, because otherwise, like the car sales have gone down, the sales of white goods have gone down, the sales of some other goods have gone down ever since Prime Minister made this announcement. People are wanting to wait until then. So this has suddenly slowed down the market. So I think through your channel today, I would like to say that this be done sooner than later, because it's going to lead to a slowdown in the economy overall, because it's going to slow down the consumption, Malvika.